welcome to today's session. Super excited to be here with every single one of y'all. We're not going to be on this video for too long, guys, but let's go ahead and get right into it, straight into the sauce, straight into the value, so that we can ultimately be prepared for this up and coming week that we have here in the markets. All right, so just a quick glance, guys, of the overall economic calendar. I'm not going to go over all of these events. I'm just going to look at more so the more important ones, in my opinion, that are the more important ones. And it's going to be starting off with today. All right, now I get it today. You know, the markets open up not till later on tonight. But we do have, guys, a major event that is happening today that will possibly influence the Japanese yen as a whole, because they have their GDP numbers quarter over quarter getting released. This is actually going to tell us how their GDP, how it was, if it grew or if it contracted over the last quarter, Q2. So this is definitely going to be a very important release overall, guys, because especially when we're talking about the Japanese yen, you know, the Bank of Japan, guys, they have been really, I'm not going to say behind the curve when it comes to inflation and pretty much just reacting to like how all these other central banks are doing. But depending on what comes out on this GDP report or on this GDP data, right, whether, you know, their economy has either expanded or if it's contracted, it can cause their central bank to actually go ahead and start to act. As of right now, guys, if we really look at the Japanese yen and we compare it to pretty much every other major central bank in the world, it's like the only one that has not really been changing anything, right? Like, look at this. These are the biggest world central banks, the major ones. And every single one, look at the last change in terms of if they raised interest rates or not. Right, 2022, 2022, 2022. Almost every single one is 2022, except, guess who? Bank of Japan, right? The Bank of Japan, guys, has not changed rates in the past 6 years, right, since 2016. But things can drastically change, okay? Depending on, again, this actual GDP report that does come out. So definitely very interesting to see exactly what this actually does do later on today. But if we really take a look at the markets really quickly, guys, and we actually look at the actual markets like UJ, we can see that UJ has been absolutely getting destroyed, right? The dollar has just been so much more dominant than the Japanese yen, and it does have to play into on how the Bank of Japan is approaching and dealing with overall current situations, guys, that we're pretty much experiencing across the world. So the reason why we've all been experiencing yen weakness tremendously is because their central bank has not been acting. All right, their central bank is still printing money. Their central bank is still going through more so things that's going to cause inflation. Right, they're very inflationary over there as a central bank, as opposed to every other central bank across the world that is raising rates, trying to go through a period of deflationary. Right, so very interesting. Again, depending on how this data comes out, it could cause the Bank of Japan to actually start acting a little bit more aggressively, as opposed to how they're approaching, you know, overall state of the economies, right? But as of right now, guys, again, they did have negative growth last quarter, Q1. Right now, they're expecting 0.6%, so they are actually expecting their economy to expand, not contract. Negative numbers means contraction. Right? Positive numbers means expansion. Since the previous reading came out at negative 0.1%, if it comes out at 0.6%, that is considered expansion. That means that their economy actually grew from Q1 to Q2. And if that happens, then I don't see the Bank of Japan doing anything different than what they've been doing, right? But if this does come out negative for whatever reason, if it comes out negative and now the Bank of Japan has experienced 2 quarters consecutively of contracting markets, that is definitely going to put pressure on the Bank of Japan to absolutely go ahead and start to tighten up monetary policy, just like every other central bank is doing. So again, this is definitely going to be a very important news release, guys, that we do have later on today. It doesn't release for about 7 hours or so, but you know, it's definitely going to be something that's very interesting for sure. Right, so keep your eyes on that one going into tonight, because you never know. That can absolutely, right, depending on how that comes out, we can either send the dollar flying once again, or it can continue to send UJ, at least during this little correction that we've been experiencing. You know, we could actually see a deeper correction depending on how that data comes out. All right, so that's going to be very interesting to see pretty much. But overall, my opinion, I think we're still going to see overall yen weakness. long term, right? So that's pretty much where we're at in terms of that news release, guys. Go ahead and see what other ones are going to be on the calendar that are of importance for us. So looking on Tuesday, we do have core CPI for the Canadian dollar. Obviously, right now, CPI is definitely probably one of the most important news releases that's happening across the board, because that is what measures the change in the price of goods, aka that shows us how good or how bad inflation currently is doing. So that's definitely one of the most important ones that pretty much every trader, investor, I mean, a lot of big boys in this space, smart money, big money, they're all looking at these reports, guys, especially if they're interested in that specific currency. They're definitely paying attention to every single time a CPI report comes out, because it can tell us how inflation pretty much is doing. Okay, so that's going to be interesting for sure on Tuesday, guys. We also do have, the interest rate decision for the Bank of New Zealand. Again, very important deal right now. Central banks are raising interest rates to try to combat inflation. So this has literally just been a trend that's been happening all year, where we're seeing interest rates go higher and higher for every central bank across the board. So I'm definitely expecting this to continue to increase overall, guys, for the New Zealand dollar. And obviously, typically how we look at this, when interest rates are going up, right, that can benefit the actual currency itself. So in my opinion, we could have been expecting some New Zealand strength either over the past week or so. Yep, and that's exactly what we've been experiencing, right? New Zealand strength. But now, based off the actual data, depending on how the data comes out, the data could have either been priced into the markets with this push up, right? Or the markets could still react to the data as well once it actually does come out, depending on how it actually comes out, right? So I'll definitely take a look at that as well, though, when we do get into the markets. But that's definitely something to keep your eyes on, guys, if you are going to be trading any New Zealand pairs as well. Now, going into Wednesday, guys, we do have a major one with the pound, right? We have CPI year over year for the Great Britain pound. Again, very, very important news release. Gonna help us pretty much figure out if inflation is under control over there in the UK, or if inflation still needs a little bit more help from the Fed and the government itself. Last CPI report came out at 9.4%. They're actually expecting an increase of 9.8. That is massive. So definitely going to continue to pretty much weaken the economy over there in the UK, guys, right? If this does come out higher, right? If we go from 9.4 to 9.8, the pound is definitely going to gain strength, and the economy over there is going to continue to weaken overall, okay? So that's definitely going to be one of the most important ones that we have to look out for this week as well, especially for all of my pound traders, which I know a lot of us love pound yen and things like that. So I'm definitely going to be aware of that for sure. We also have USD news, guys, with retail sales at 8:30. Also, again, something that's going to be very, very important. Because, retail sales or consumer spending as a whole, guys, is definitely something that drives. It helps keep inflation high if we still have, a lot of people still spending. So this is definitely something that as well, a lot of people are going to be keeping their eye on to see pretty much how it actually comes out. Now, as of right now, they are expecting retail sales to absolutely drop, going from 1.1% retail sales from last month to now just 0.1%, even for core -%. So this is, again, going to be looked at as bad for the economy, could possibly strengthen the currency as a whole. So we'll see ultimately how this does come out, though. But it does look very interesting, guys. Now, on Wednesday, the most important release on Wednesday, guys, is going to be this FOMC meeting minutes. It just gives us an insight, guys, to how the Fed is actually approaching every single thing that we're dealing with right now. And we can get sentiment, guys, from these type of meetings, because this is when they speak, right? Jerome Powell and his team is going to give some type of insight, or at least we're going to be able to see what Jerome Powell and his team has been talking about in their meetings, right? So we could definitely keep our eye on that one as well, guys. And then going into Thursday, we have CPI for the euro. Again, a very, very important release, but we also do have initial jobless claims and existing home sales. And then to finish out the week, guys, we have retail sales for both the pound and the CAD. So we do have some very interesting data for this week. And yeah, we'll see how that actually ends up playing out, guys. So let's go ahead and take a look now at the markets. And let's see what we got here, right? So I pretty much I want to start off fresh charts. So I'm going to erase a lot of these different markups that I might have had, just that we can get some fresh charts looking in here. And then we can go ahead and figure out, yeah, what we can pretty much do in real time. Like literally right now, as I'm literally deleting every single one. I don't want to see no markings on my charts at all. Or I want a clean chart, clean slate. so that we can go ahead and have some clean thoughts as we go ahead and approach this week as a whole. All right. So let's see. Anything on these indices? Nope, nope, nope. UEC is just a stock that I've been playing around with. All right, so now that we got those clear, guys, should go ahead and now get into this, right? So overall, quick look at the dollar index, see what we pretty much got going on here, guys. And I'm honestly, if I'm being honest, I'm actually a little bit torn on what I think the dollar is going to do. Now, long term, I'm still very much bullish, right? We don't have no evidence just yet of an overall change in sentiment. So we don't have no evidence yet of an overall change of trend. All right. As of right now, goes, even though we did have good numbers that came out last week. I can't remember what was the release last week. Let me see. I can't remember what. Give me 1 second, guys. I can't remember what release was last week. Let's see. CPI. That's what it was. How did I forget that? Right. So even though we did have, guys, good CPI data that actually came out, showed that inflation actually pretty much found a plateau for now, right? Found a high for now, right? So we did have some positive data, guys, that will probably, decrease the actual value of the currency and possibly increase the strength of the economy as a whole. But I do believe, in my opinion, that is still going to be short-lived. So again, I am very much torn, guys, on what I think the dollar going to do. I'm still very much bullish, but we could see short-term bearishness still very much, right? So this is how I'm going to be playing going into this week. Okay, today and tomorrow, I might end up just being on the sidelines. I might just take a step back and just let the markets do what they do. I might not trade any dollar pairs, at least as of right now, just because I really want to see what the market is about to do. In my head, there is a very good chance for the market to rebound and really start to go back to the upside. That's very, very possible, especially after the correction. Like, that's really the best chance to actually start looking for opportunities to go long. So even though I do think that there is a chance for the dollar itself to continue this bearishness, I don't know. My gut feeling is still telling me now that we actually might end up rebounding and going back to the upside. That there is actually a good chance for the market to actually rebound and then continue back in this bullish dominance that we have been in. Right. And if we do see bullish dominance for the dollar coming back in, then everything else is going to be very, very easy to predict. Right. Trying to figure out what the dollar it's going to do is usually probably going to be one of the hardest things, especially just with the mixed data that we've been seeing. We've been seeing so much mixed data across the board that it definitely brings a lot more confusion as to what investors and traders should do. We're getting positive data slapped around with negative data slapped around by positive data. Then we got, central bankers and Federal Reserve and the government over here, talking a certain way. But then the data, it's definitely been a lot of conflicting data that's been getting released overall. But I still believe there is a chance for us to continue to rebound, right? Because I don't think inflation itself, yeah, we've seen inflation turn around a little bit. I don't think it's overall completely done, right? Even if it is, again, the Federal Reserve's goal is to get inflation back around 2%. We're at 9% still, 8%, 8.5%. So we still have a lot ways to go to actually get to the goal that the Federal Reserve has. So with that said, and there's a reason why I'm still long-term bullish the dollar, is because with that said, the Federal Reserve still does not plan on stopping raising interest rates, right? In fact, they're still going to continue to raise interest rates throughout this whole entire year. Okay, they're not going to start to U-turn on interest rates until they finally got inflation back close to that 2-3% level. So as long as we're still raising interest rates, as long as we're still going through the process of tightening up monetary policy, the dollar just looks so much attractive. It just looks so much more attractive than anything else during these current periods in time. So I'm very much still, guys, looking for more continuations higher here, in my opinion, for the dollar. I could be completely wrong. We did have some positive data that could send us much lower. And if that happens, then it is what it is. We'll adjust, right? But for now, just based on what I'm looking right now at the markets in real time and what my head is telling me, I would not be surprised if we actually did finally start to rebound for the dollar and start to see higher pricing. All right, so that's just pretty much where I'm looking at. And if we actually look at this, guys, right, and if you look at any of my previous, Sunday sessions that I've hosted and I put on YouTube, I've been telling you guys literally that I wanted to see price come down into this level right here, right? Come back, retest this little area of structure, and then go ahead and rebound. So we are at the area of interest that I've been waiting for. And so yeah, there is still, again, a very good chance, guys, for price to rebound. So that's what I'm looking for. I'm expecting bullishness to come in. Maybe if we see price come back down to around, this level of structure around the 105, right? Maybe back around around the 105 level, like maybe back down into this little circle right here, this yellow circle. Down there, guys, will be a super, super attractive area to go ahead and start looking for buy longs here for the dollar. So that's just my opinion on the dollar. Let's go ahead and take a look at a few other opportunities now and pretty much see what we got here. So with that said, let's take a look at euro. All right, looking at the euro, guys, itself, we had massive push down, and then we had this correctiveness actually come in. Correction actually came back to the 50-period moving average here on the daily time frame. But if we also line up that moving average, guys, with previous structure to the left, we can also see that we do have a lot of confluence there that could be adding selling pressure to this market overall. Again, lining up the moving average with the levels of structure, it does look pretty juicy. All right, so that doesn't look bad. Again, I'm expecting for the euro, if I'm expecting, dollar strength to potentially come back in, then that means we should expect euro weakness. Right? Because remember what I said, if I could figure out what the dollar is going to do overall, everything else is going to be pretty much easy across the board to figure out what's going to happen. So if I have a stronger dollar, then things that end in USD should actually lose value. Why? Because whenever the dollar, the USD, is in the second part of the actual pair, right? When it is the second pair in the equation, right? But yeah, we have dollar strength. That is going to cause the market to drop and go in a downtrend, okay? Because this one is more dominant than the first currency, and that causes dollar strength to dominate, and that will cause euro weakness. So overall, guys, I really do like the opportunity for us to go ahead and go short here for the euro. I mean, realistically speaking, like we could really even see price like for real, like really start to shift very, very soon as well, early in the week. And start sending us much lower here, guys, for the euro. So I like it. In my opinion, it definitely looks good. So overall, I'm going to be looking for some euro shorts going into this week. And I will see how that one ends up playing out. Let me actually go ahead and mark this one up. Green. Perfect. All right. So that's definitely one I'm going to keep my eyes on. Let's take a look at pound dollar. Again, very similar thought process here. Looking at pound dollar, guys, what have we ultimately seen? Market has been creating these lower lows, lower highs, lower lows, lower highs. We finally seen another pullback in the market. All right, and these are opportunities to go ahead and go short on. If we, again, use confluence evidence, right, we have the moving average. We have price pretty much stalling at this moving average. We also do have levels of structure to the left that also are giving us added confluence. I mean, just looking at candlesticks as well, we did get up a nice little bearish engulfing candlestick. Like, I really like this opportunity to go ahead and go short here for GGU as well, right? So if we're able to see price pull back up, maybe back up to where this last little selling pressure actually started, right? You see this little sell-off right here? Let me actually use this, right? You see this little sell-off right here, right? Well, now if we're waiting for a pullback to look for an entry, where should we be looking for that entry from? At the start of the actual move, all right? So if we seen selling pressure pick up here at this candlestick with this engulfing, then that's where we should be looking for another re-entry, right? So if the market does come up into that level, that's where we can go ahead and look for some opportunities to short here, guys, on GBPUSD, right? Maybe something like this overall, right? So again, not a bad looking setup. It looks very, very good. Looks very, very juicy in my opinion. So looking to short GU around the 1.218 is definitely looking super, super attractive for sure as a potential play that we could take advantage of, right? So I'm gonna keep this one on my radar as well because it does look juicy. Let's see what else we got here. Let's go take a look at USD JPY. All right, so UJ, what have we been seeing? Again, it really depends on the data that we get later on tonight with the yen, but overall, I'm still very much bullish. Let's just take a look at what structure has pretty much done. So we have this level of structure right here, guys, that the market was playing around, but then we also have this previous level of resistance as well, right? So we did end up getting this level of structure support. Price eventually broke it, retested previous level of resistance, and then we've seen a pretty strong reaction right out of that level, okay? So I think that there is very much a chance for price to go ahead and go higher. Now, what do I want to see here? Well, right here on the daily time frame, guys, if we really look at price here on the daily, we're still trading below the 50-period moving average here on the daily. So if we can go ahead and break above this 50-period moving average, which is around the 133.9 to 134 level, if we can get a break above that level, I'm a very, very big fan of looking for some longs after that, right? So a strong break above this 134, a rebound to then go ahead and look for continuations. Very, very, very possible play here, guys, for UJ. Absolutely looks juicy, right? So that's one opportunity, right? That's more of a safer play, right? If you want to be more, confident with the opportunity, if you want to actually get more confirmation before we look for buys, that's what we could do, right? Wait for that 134 to break, retest, and then go ahead and look for that long. Another opportunity here, if you want to be a little bit more riskier to be able to get a better risk to reward, you can also play off of this last bearish candle. All right, this last bearish candle before the market started to rebound up here, that engulfing, clearly there was a lot of buying pressure, guys, that caused the market to actually pretty much react the way that it did. So there is a chance for price to come back down to this level before we actually go ahead and start seeing higher pricing. Now, again, a little bit riskier because price could very easily just smash that and continue going lower as opposed to just waiting for the break of that 134 and continuation. But on the upside to it, the risk to reward is also going to be far better, okay? Risk to reward going to be far better. The setup is going to look a lot more juicier because the risk to reward looks better. And yeah, so that's something that you guys can also keep your eyes on for sure. But overall, I really do like it. I really think that there is a good chance for, UJ to absolutely go ahead and rebound and send us at least back up to the upside for sure, right? So again, another juicy looking setup here, guys, to start off the week. USD Jpy. I'm also going to keep that one on my radar for sure. And we'll see how that one ends up playing out. All right, now I'm really just going through a lot of these USD pairs first, and I'm going to go through a few of the cross pairs that I have for sure. But let's see what else we got here, guys. So USD Cad, right? What is USD Cad doing? So we spoke about this as well over the past weeks or so. USD Cad technically is bullish, right? Because we have been seeing this bullish uptrend for the past 1.5 to 2 years as of right now. But if we really compare, guys, USD Cad, and say we compare it against maybe just a regular dollar index, right, we can see mass differences, right? Typically, USD Cad, if the dollar is as dominant against the CAD as it is against other currency pairs across the board, we should have seen USD CAD do something similar like this, right? Where we have just a lot of strength. I mean, look at UJ, right? A lot of strength, right? But USD CAD is definitely a little different, right? And that just shows us how strong the CAD is as well, right? So yeah, the dollar itself has been the most dominant currency across the board, but clearly it hasn't really done much against the CAD, right? Where we have just been very, very choppy for the past year. We're in a daily time frame. So yeah, the CAD strength is also a very real thing, and it could definitely hold a lot of weight, right? So I'm going to approach this one a little bit differently than how I approach, all the other dollar crosses, because the CAD is definitely a currency that's also pretty much throwing its weight around. But looking at what we got here, guys, for the CAD, there's two things that I'm going to be looking for. Right now, we are showing very interesting price action that we are starting to slow down. We are at a level of structure as well. So price could very easily actually start to rebound from here. Again, that is a very, very big possibility for that to actually occur for sure, right? Where price could hold this level and then continue to go bullish. Again, that's very possible, right? If you don't think it's possible, then you tripping. But what I think, again, normally I will look for that all day, and it is very possible. But just based on this, how this market has been acting, and just based on this price action, guys, it just seems like every single time we came up to the top of the range, we end up pushing all the way back down to the lower. So if I'm looking for any type of long opportunities here for USD CAD, it's most likely going to have to be somewhere inside of this range down here a little bit lower, right? So if we're able to get price for UCAD into this, say, 1.26 level, that can be an opportunity to go ahead and look for some more longs. So that's just my bigger perspective here, right? I want to look for buys around the 1.26 level for USD CAD. Now, since we have our bigger perspective, and I think that there's a chance for price to come lower, now we got to position ourselves in a way to get involved. Well, cool, right? If we do want to, say, take advantage of the short opportunity, say the sell side, right? Because we want to target down here to 1.26, very simple. Go to lower time from now, right? We notice that we have strong push right there. So if price can get back up into that area, that can be an opportunity to go ahead and short this thing lower. Okay, let me say that one more time, guys, right? If price does have the ability to push back up to the 1.28 level, 1.825, that could be an opportunity to definitely go ahead and go short on, right? Maybe something like this could be a decent opportunity here, guys, for USD Cad. All right. So overall, again, it doesn't look bad. It definitely is pretty juicy right now. So something else that you guys can pretty much just keep on your radar going into this week, especially if you guys like trading USD Cad, things like that. I mean, if you like trading it, then in my opinion, this is probably going to be the best bet for you. In my opinion, of course, right? So I like that. I like that a lot, though. You know, somewhere up around that 1.285, 1.29 is definitely looking very juicy for some shorts. All right, let's take a look at GJ, right? I know GJ is definitely a fan favorite. Again, very similar. GJ has been very bullish for the past year or so, but ever since, I would say, March, right? Ever since March, we have been very, very choppy. You know, we've been just pretty much in this range. You know, we've seen this massive run up to the upside. Like this was literally over 1,000 pips or so. And then ever since then, we've just been very, very choppy. Okay. So just keep that in mind with GJ. You know, we really have been extremely choppy over the past few weeks, over the past few months. So it's definitely something to consider. Now, let's go ahead and see where we're at, though, right? In terms of structure and inside of this big range that we're currently at. So we're looking at price, guys, and we're looking at this level of support right here that's been holding. And it's very, very strong. And I think that there is a chance, guys, for price to still bounce off of this level and absolutely rebound. So that's going to be my bet, right? I think that there is going to be a rebound to continue in this bullish trend for GJ. What will change my mind is if we actually come in close below the 160.5 level, right? A break below this level and a close below this level is probably going to trigger me to look for some shorts all the way down here to around 155, right? But until then, I'm bullish, right? So I'm looking for buys as long as we continue to stay above this 161, 162 level. So let's go ahead and go lower time frame now and see pretty much where we're at and what we could do, right? So looking here on the 2-hour, 1-hour time frame, guys, we are at very interesting levels. I mean, there is a chance for price to really just rebound from where it's at right now and continue. That's very possible. I wouldn't be surprised if that actually happened. But I also wouldn't be surprised if we came down to around the 161,500. So overall, I'm looking for buys off of one of these areas, either 161,900 or 161,500, to then go ahead and continue in this bullish play in the overall bullish trend that I think GJ is actually in, right? So definitely looking for some longs here, guys, for GJ going into this week. So, you know, we'll see ultimately, like I said, how that one ends up playing out as well. All right, let's go take a look at gold, right? So gold is definitely a fun asset to actually trade just because of how volatile it is. But let's see what gold is doing, guys, overall. So very quickly, last move that we've seen, impulse, we've seen very, very aggressive drop to the downside. You know, that did end up clearing various levels of support, structure support. Now we're seeing the market just rebound. And now we're literally at an area, guys, where we should, for the most part, be leaning towards continuations lower, right? Just because of staying with structure, market structure overall, staying with the overall order flow of this market. But we also have to keep in mind that if the market just rebounds, that this same exact zone can also act as an opportunity to go ahead and send us higher. Okay, so I'm leaning towards a sell to stay with the overall order flow of this market. I want to look for sells, but if the market just does not respect it and we break above, you know, this 18 level, 1800 zone, then at that point, I'm just going to be looking for some longs instead, right? So I'm sticking with the short side just because that's where the order flow of the market is, the momentum. But I will adjust if the market just breaks that level by looking for some longs. Okay, so that's as simple as it gets, guys. When it comes to gold, we're at a very, very interesting level, make or break type of zone, right? So where it can either continue in this last bearishness or it can actually break and give us something different moving forward, right? So overall, I'm going to be very, very patient with gold for sure to see what the market ultimately does give us. But I will tell you guys this, all right? If we are going to go ahead and go short from these areas, right? Because again, my bias is that I'm leaning towards, you know, bearishness to come in, right? So if we are leaning towards bearishness, guys, then we're pretty much at an interesting level right now. Like right where we're coming into is a very, very interesting level, guys, that we can realistically play off of before we continue. So, you know, this 1810 level, if we come up to, say, the 18.9, 1810, and we hold, I'm selling that all day, right? Now, if we break it, then again, like I told you, I'll be looking for buys instead. But for now, I really like to short from that 1809, 1810 level if we can go ahead and get up there, right? Just giving us that confluence with the top of the channel, the level of structure. You know, we have the supply zone as well. So we got a bunch of different confluences up here, supply zone, top of the channel, top of the level of structure, all that good stuff. So, you know, I do like the potential for price to go ahead and possibly shift up in these areas up here, guys, that I'm looking at. So that's another one for gold. Also very, very interesting to say the least. You know, I will be keeping my eyes on that. But like I said, I'm going to be very cautious at the start of the week to see how the market does end up pretty much just playing out for us. All right, and finally, let's go take a look at these quick indices really, really quickly, guys. I'm just going to take a look at the S&P 500. Pretty much all of them are going to be very, very similar, whether it's the S&P, whether it's US 30, which is this is right here, or whether this is NAS 100, right? So NAS, S&P, US 30, right? They all are very, very identical. They move very, very similar. So I'm just going to stick with the S&P, though, because it's the one that's more so used for like the broad overall perspective of the market. And let's see what we got here, guys. So overall, over the last couple of weeks, we have been seeing this thing finally starting to rebound. Finally found like a low overall in the stock or in the indice market, and we did start to rebound. Now, I think this is going to be short-lived. I very am much so thinking that we are going to continue in a bearish trend, in my opinion. But I do also believe that we still might have some short-term bullishness to come in. Right, I'm really a big fan, guys, of the S&P around the 4375, 4400 level. If we can make our way up into that level up there, close a little bit of this cream traffic, a little bit of this imbalanced fair value gap, whatever you want to call it, I think that we really will probably find a lot of selling pressure for these indices overall. So very interesting for sure, but that's just my opinion from a technical perspective. Now, just keep in mind, if you are going to be trading indices, guys, you really do want to be understanding of fundamental and sentimental analysis, because like this market reacts and responds to sentiment of the markets overall, right? Yes, technicals plays a play in it, but overall, the big players, the big boys, the smart money, right? The big institutions, right? They're paying attention to the data, which is going to influence their decision on what they do here. So that's just something to keep in mind, guys. But my personal opinion, my guess going into this week is that we go ahead and we reach around the 4350, 4400 level. And then from there, we can go ahead and look for some opportunities to go ahead and go short on. All right, so that's pretty much my favorite opportunities, guys, going into this week. EURUSD, UJ, GBP, USD, GJ, the S&P, NAS. I mean, I looked at a bunch of these for you guys, GBP, USD, USD Cad. So now it's just all about taking the setup that makes the most sense to y'all, seeing if it makes sense, if it aligns with your strategy, your way of trading. If both of our biases align, then it's just all about the execution, right? Finding the right time and place to actually go ahead and enter these trades overall. Right, for family, I do appreciate y'all. I love you guys so much for rocking with me, and I hope you guys were able to gain this value.